Hey, what's up, my beautiful people? It's your boy Devo, some motivational, back with another day trading QQQ recap. Okay, real quick, as always, I want to say thank you all for all the likes, the comments, the subscribes. I appreciate every single one of y'all with me through the journey, and let's get straight into it. Okay, so today, sorry, I had to get more comfortable in the chair. So today, we had two trades. Um, a little not frustrated because I seen where I went wrong. One trade was a winner, one trade was a loser. We ended off in the green today. You know, small amount, but we ended off in the green today. We're looking for another trade right now. At this fair value gap, I'll get more into it in a little bit. And not frustrated at the loss because we learned from it, but a little frustrated because it went to the exact place I knew it was going to go to. And we're going to go over it. And this is also a good example of showing you how my strategy was on both of the trades. I had my strategy on both of the trades. I took both of the trades. The difference is I had one loser and one winner, but guess what? My winner outweighed my loser, so I still ended up green on the day. Okay, so that is a prime example how your winners should always be bigger than your losers. And I'll show you another lesson that I learned and should have been more aware of looking at. Okay, so let's go straight into it today. Let's start off with the economic data that we had coming out today. So today we had some news. I mean, we have Fed Powell speaking right now, but we had 30-year mortgage rate, mortgage applications, mortgage market index, mortgage refinance index. I mean, the housing numbers we already know have been bad for a while. Like the market already knows that. They've been pretty bad all year. And the new home sales see 0.623, previous 0.72, consensus was 0.69, so worse than consensus. But again, we all knew that I mean, the housing numbers are bad and homes are not really being bought. See, actual negative 13.7, previous 9.6, forecasted negative 5.8. So it actually came out way worse than expected. Crude oil stocks change came in worse than expected, better than previous. Imports change came in better than previous. Gasoline stocks change came in worse than previous and worse than consensus. And we have the Fed talking right now, so that is also, I feel like, chopping up the market a little bit. Yesterday we didn't have a trade. Why? Because we just really didn't see what we wanted to see. I was kind of favoring the downside yesterday. Honestly, I really don't remember too much why I didn't trade. I was favoring the downside, as well as it was very choppy on the upside. When we finally broke structure to the upside, we didn't really have no entry point, and it was very choppy going up yesterday. Okay, so I'm gonna show you guys my two trades. So I didn't have a trade yesterday. Very choppy day yesterday. I mean, it did trend up, but it was very choppy and very slow. Look at this. Look, say if whenever it broke structure to the upside, came down. This isn't even a good entry, but say if I just got in right here, right? 11:05, 11 o'clock. For me to get, and then look, 11:05 at 6:05.70, right? For me to get 6:05.70 to 6:07.15, which is a 45-cent move, I had to be in that market for 45 minutes. So you see, it's very choppy of a move. Today, what was I looking at? I was looking at more of a downside. Yesterday, we created a new all-time high for the Qs, and so today I was looking for a bit of a pullback, but I was just gonna see what the market was gonna give me. So my first trade, what I was looking at was like, okay, we pumped up, then we broke down, came back up, we created an equal low, as we see right here. Well, we took out this low, but we pumped back up, and I was like, okay, I want to short the market. We have, oh my god, man, we have relative equal lows, right? Relative equal lows. And I was like, okay, I want to short the market, but at first I was on the SPY. So on the SPY, we had a breakdown, right? So a change of character to the downside, and I have this down here. Why? Because this one right here is equal lows, as well as below it we have a demand area. So let me go to my 5 minutes to show you guys. So we have this 5 minute fair value gap, like little gap right here. So you see this little gap right here. So I was like, okay. And then I wanted us to take out this equal low as well as touch this gap, maybe touch this order block, but touch this gap, and then we could continue up. But that's where I was targeting. I wanted those equal lows. Excuse me, my good people. So again, we had a breakdown, we had a pullback, and what did we not have? We had this top fair value gap right here, but we did not touch that fair value gap. We actually overshot it. So that's what made me skeptical on it. And I was like, and I didn't want to take it, right? And then I was targeting. So this is what my entry would have been. Boom. And then targeting these lows, right? What did we do? We shot out, we overshot it. So that made me not really trust it as much. And what did we do? On the Qs. So then I looked at the Qs and we had pretty much the same setup, but what did we do? We shot up into a perfect, the highest fair value gap, highest bearish fair value gap, which I always tell you guys you usually want to take the highest fair value gap whenever you're bearish and the lowest fair value gap when you're bullish. And this was what my entry was, okay? So I took it up here, right around here, pretty much right when I got in, boom, 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 just played around a little bit, then boom, 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 broke down. Only had one contract in, and that was plus $54, okay? That was plus $54. It went down, and I got out like right around here, right? So that was plus 54 bucks. That was my first trade. Then we broke down some more, and I didn't get all of this. I don't believe I got all of this. I don't believe I got this whole move downwards. I think I pretty much got out at this like wicks right here. I think this is pretty much when I got out. And what did we do? We broke down. I was like, okay, if we want to break down some more, I'm looking for another fair value gap. You know what I'm saying? Because I feel like on the Qs we had more to run down as well on the spot. Because why? Because we stopped right here in this gap, but I felt like we still had a lot of gap to run. And then as well as we could take out some of these equal lows, you know, probably try to find another demand zone as well as we have this little fair value gap right here, right? So we could take out these equal lows and trace into this fair value gap. And I'm gonna show you the third entry I'm looking at, and it's looking like it's gonna break these lows, and it's freaking making me mad, man. This is not giving the entry. Oh my goodness. Oh my God, I can't stand the market sometimes, man. I can't stand the market sometimes. Oh my God. It's just stressing me out, man. And look, did everything I said. We do have this fair value gap right here, overshot it, so now we could take out these equal lows down here because we overshot this fair value gap, so you invalidated it. It could, and then it traded in, touched this order block right here that broke structure. It just didn't give the pullback. It didn't give the pullback into that fair value gap. I would have wanted this fair value gap right here touched, which we had all these equal highs right here. We could have swept out, touched it to this fair value gap, then dropped down and broke structure. Oh my goodness, man. So now I'm starting to get frustrated because the market is playing with me, man. So that was my first entry with the W on $54. So I didn't find another entry on the Qs, which is why I switched over to the SPY. Also because the SPY, I like the SPY. SPY is my bread and butter. So I switched back over to the SPY, and I took another entry right here. Stop loss right here, and I had it like that. My second entry, got in at this fair value gap. I was like, okay, we broke structure. It wasn't a break of structure. I'm gonna show you guys. But I was like, okay, we broke structure, gave a pullback into this 1 minute fair value gap. Boom, got in right here. Stop loss up here. Played around for a bit. And then we had these equal highs right here. I was like, okay, we could sweep out these equal highs and touch this little gap right here. So we could sweep out these highs, maybe overshoot a little bit, touch this order block, and then we could drop down. What did we do? We came all the way up, stopped me out because I had my stop loss right here. Stopped me out, created an equal high, which we're going to take out eventually, created an equal high, Then boom, 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 broke down to my take profit, and that was frustrating. That was a frustrating one, okay? But I was like, how can I learn from it? That was frustrating. How can I learn from it? So I was like, okay, did it break structure really? Right? Because I'm looking at it. It didn't break structure. So technically, my stop loss has to be on the top of the range because it's basically range because it did not break structure, right? So the entry was still good, everything was still good, but I had to have my stop loss on the top, the very top, because there was no other higher, there was no other lower high. Why? Because it didn't break structure to the downside, right? Because as we know, we have a high, a low, a lower high, lower low, lower high, lower low, right? For a downtrend. We didn't yet have that, right? We were given bearish signals. It was breaking down, sweeping lows, looking like it was going to break down, but it didn't break structure to the downside yet. On the 1 minute, it did, but on my 5 minute, what did it do? It wicked it. It wicked it. So it didn't actually break the structure. So on my pullback, I had to have my stop loss at the very top of our high, on our last high, right? Because whenever you have a break of structure, you put your stop loss at that last lower high. Well, we didn't have a lower high yet, right? So I got to have my stop loss at that the last high, right? So I had my stop loss right here. It stopped me out, and it should have been right here, right at my last high. This wasn't my last high because this high didn't break structure. You see what I'm saying? And that is where I messed up because it came up, it stopped me out, it created equal highs. So that's where I was like, okay, when it broke down and getting in another entry, like right around here, I was not confident in getting another entry to break. I still felt like those lows were going to get taken, right? These lows, as well as you had like trend line liquidity right here. So I still feel like those lows were going to get taken. But I was like, okay, now we created an equal high, equal highs, relative equal highs, right? Because you relatively have equal highs right here, right? If you look at it. And so that's where I was like uncomfortable on the downside right here. I still feel like these lows wanted to get taken, but at the same time, we have equal highs. So it was risky to take another trade, right? So that's why I didn't take another entry. And that's where I got stopped out, minus $39. So made 54 bucks on the other one, minus 39 bucks on this one, and so up 15 bucks on the day, right? That was a bummer. Mad because that could have been a big day. I could have been up over 100 bucks on the day just off one contract alone. Just one contract on the other one, 54 bucks, and then another one contract on this one could have been about another probably 54, probably more than that bucks, right? So that one was frustrating, but you know, you learn from it because future trades, I'm gonna be looking and be like, did we actually break structure on them? You know, making sure we didn't just sweep them out. And so that one was on me, you know what I'm saying? And that's a good learning experience. You know, I'd rather be green on the day with the learning experience than red on the day with the learning experience, right? And so what was my third trade I was looking at? So this is where I switched back to the Qs. Why did I switch back to the Qs? I was like, okay, because technically, again, on my SPY, we were ranging, right? Because we weren't breaking structure. We finally did break structure, right? But then now we have no like good looking entry, right? Because we went all the way up. There's no supply area up here, right? This is just a resistance. There's no supply area up here. So it didn't feel like, it didn't follow my strategy, right? Because if we would have swept all this and had like some type of supply area, swept this and had like some type of supply area up here, like a fair value gap or a gap, I'd have been like, okay, that's a good entry to the downside. We didn't have none of that. So what was I looking at? So I went back to the Qs. I was like, okay, let me look at the Qs. The Qs, we actually were breaking structure to the downside, right? Because we had a high, a low, a high, a lower low, a lower high. Now we have a lower low, another lower high. And I was looking at this. I'm going to get further into that. So on the Qs, we actually broke structure, right? And again, so on the Qs, we actually broke structure. But I didn't see no supply area again on here, right? Because if we come to our 5 minute, it swept all the way up, right? This is basically, whenever it made this big push up, this is basically where it swept me out and stopped me out on the SPY. And I was like, okay, but we don't have no supply areas on the Qs either. The Qs is breaking structure because I was like, okay, it didn't break structure. That is on me. But I'm looking, I'm like, there's no supply areas to be trading into, right? as well as on my Qs, I was like, okay, in the Qs, we actually were breaking structure, but we still have no supply areas to be trading into. So I don't see the entry. You know what I'm saying? But this is where I found the entry. Because we still do have a lower low, we created a lower high, another, or a lower high, and then we created this low right here. This is not a lower low, but what did we do? We stopped short, created another this created an opportunity right here, because when it broke back down, it created gaps to fill and to give you your entry. So that's what I was looking at on my 5 minute. On my 5 minute right here, I was looking for a retrace, because remember, this isn't a gap yet, right? Because we don't have this break of structure yet, right? So we were just tracing with the 5 minute candle, we were just retracing or giving a pullback into this 5 minute candle. So what was I looking at? Okay, we're retracing into my 5 minute candle, giving the pullback into this gap, right? This gap or this gap, not this one. This is like the lowest bearish fair value gap, right? We want the biggest one, I mean the highest one. So I want to either this one or this one, and then I could have, boom. And why would I have my stop loss at this high and not all the way up here? Because it's a lower high, lower low, right? And then this is the pullback, right? So this lower high created a lower low. So this swing created a break of structure. Now you have a pullback, and so that's the pullback. So you could have it right here. To be safe, you could have it right here, but technically you could have it on this one, right? Remember, on the SPY, we never had our previous swing. This previous swing didn't break structure. It just swept it out. Remember, on this swing right here, we just swept it out. We didn't actually break structure, right? Are you seeing what I'm saying? So this swing up here didn't break structure yet. So technically, this is our last lower high. I mean, yeah, this is technically our last high that we had to have our stop loss on. If this swing broke structure on the 5 minute, then gave this pullback, this could be our stop loss. But technically, this still has to be our stop loss because this one never broke structure yet. You see what I'm saying? So again, that one never broke structure. But if you look on the Qs, this swing right here broke structure and then gave that pullback, right? So this swing right here broke actual structure, because this is actual break of structure, then gave the pullback for it, and now your stop loss can be on the top of that pullback, right? For you to find another entry to the downside. So that's all I was looking for. A pullback into this fair value gap or this one, and then I wanted to target these lows down here. And I had this, why? Because this is where we ended off yesterday. This was the high of yesterday, also creating an all-time high. We gapped up today, but this was the all-time high yesterday, so I had this support marked out. And so this is where we had all these equal lows right here. So this is where I wanted my entry, somewhere around here. And then equal lows right here for my third entry. That's what I was looking at. Whenever I hopped on, I was looking at the entry, and it came up and boom, broke structure. Well, let's see if it broke structure. It broke structure. You see this? It actually broke structure. So it's frustrating. Why is it frustrating? Because it could have been a pretty good and pretty big green day, right? Why is it not frustrating, and why do I have to see the silver lining in it? Because it made me more aware of I have to really make sure things break structure so I can really know where my stop loss is actually supposed to be, right? And yeah, because on the SPY, I mean, it was a good entry. It was still a good entry. But the thing is, I thought we had a break of structure when we really didn't. We just had a sweep. So I mean, my entry was still good because we had that sweep, right? We had that sweep, and this was still a gap, right? And I felt like we had these equal lows down here. So, my bias was technically right, and we were dropping down, right? So then I got in the entry at this gap. I wouldn't call it a fair value gap because we didn't break structure, but I got in at this gap. but my stop loss had to be on the very top of this swing, at the top of this swing, not this swing right here. Had to be at this swing, right? And yeah, so on the Qs, that first one was so good, right? This first entry was amazing, right? Because we literally came in at the top bearish fair value gap, or a top gap, or top bearish gap, because it's not a fair value gap. It didn't break structure yet. Then I had it all the way right here, and it came all the way down and swept it all out. It swept it all out, and this is where I got out. So up 54 bucks on that one. It could have been more if I held it all the way down here, but you know, it started to wick up, broke back down, wick, doji, and this is where I got out, like somewhere around here. Then the next candle just flushed down. But I mean, we were happy with it, right? I mean, we had a perfect entry. We had our stop loss up here, perfect entry. We took out our lows that we were targeting, and that was up 54 bucks, and that was only one contract, 40% of my contract. The other one was a loss. Let me see how much percent of that contract was lost. So I mean, it is it's bummer, a little frustrating. It's a bummer, you know what I'm saying? But again, it's learning. You know, I learned from it, but. So on the contract I lost was minus 32% of it, and the contract I won was up 40%, right? And so on the week, I mean, we're up 15 bucks. I mean, this was our first two trades of the week and first trades of the day, but first trades of the week. We didn't trade Monday, Tuesday because we didn't have setups. Very choppy on Tuesday. Monday, I think it was a rangy day. I'm not sure, but most likely we didn't have a setup. That's why we didn't trade. And so today, I mean, we had our setups. We had good setups today. And the first one was a banger of a trade. The second one, we just messed up on where our stop loss should have been, and it stopped us out. And that was frustrating because when I actually noticed it and realized and went over it, I was like, why did I lose it? I noticed that my stop loss shouldn't have been where it was, and then it targeted the area I knew it was going to target, and it would have been a good profit day. So that's why it's a little frustrating, but again, it's a good learning one. Make sure that they really do break structure. We still technically do have some room to run. Right? We broke through the support. Let me see on my 5 minute, did we break through that support? My 5 minute, we broke through that support. So technically, let me see it actually, because we did trade in to that 5 minute candle. Let me see. That 1 minute. Oh, that 1 minute. We have a gap right here we can touch up here. So I might be looking for more shorts. I might be looking for more shorts to this 539 level, because look at all these equal lows. I might actually be looking right now to go short on the Qs. Why the Qs? Because the Qs is giving me good setups. The SPY, not so much giving us the good setups. I mean, we had a good setup on this one. You know, we messed up on it, but right here it's not looking that good. But the Qs are looking good on the setups. We technically have this gap up here to touch. We can sweep out this one and touch that gap right there. And I might be looking for a short, another short. Boom. This is where we broke structure, but I'd have, oh man. But we do have gaps up here, but this already broke structure. And my target, I want it right here. I want to target all the way down there. So let's check, make sure. We did break structure. 15 minute, let's see. 15 minute, we're technically wicking. Right? 15 minute, we're technically wicking. And we could technically pull back into this 15 minute fair value gap. Alright, technically we can pull into that 15 minute fair value gap. And it'd be like that. And technically could pull up into this gap right here because that's 15 minute. But on the 5 minute, we did break structure to the downside. I don't think it would pull all the way back to this 15 minute gap. Let me see. Yep, suck it out. Still sweeps. And finally broke structure. Let me see on the Qs. What I was looking at, we actually did break structure, get that pullback. Boom. Did break structure again. We have a 5-minute fair value. We have a 15-minute fair value gap right here. Now we created equal highs, so that's dangerous. So this does look like a good entry, but at the same time we do have this 15-minute fair value gap up here. So we could sweep out all of these highs, all of these relative highs, right? So we already broke structure. We already broke that. So technically we could sweep out all of these equal highs, look, equal highs, and then trade it to this 15-minute and then break down 1051. I trade 5-minute though. I trade the 5-minute and the 1-minute. But you do got to look at the 15-minute just to kind of see where you can go to. And that's why I'm a little iffy on that trade. I mean, I would want to take that trade pretty much right now if I didn't see this 15-minute gap. Right? Boom. You look high, low, lower high, lower low, because we broke structure, lower low. Now we can create a lower high into this 15-minute gap. If we go to the 5-minute, we had a high, low, lower high. Yeah, we can make this a lower low, yeah. And then we create that lower high back to this 541. Okay. So yeah, we could trade back. I honestly want to see us break down again. I want to see us break down again, create another equal low, just to create like better liquidity to hunt. So I want to see us break down, create an equal low, and then break up, touch this 1-minute. This is the 15-minute and the 5-minute, and then you just get down to the 1-minute fair value gap, and then I would have my stop loss. Let me see. Then I would have my stop loss. Stop loss has to be up there. High, low, lower high, lower low. So it does have to be at the last lower high. So technically that's what my stop loss would be. Then if you go to the 1-minute, yeah. Because technically this has to be my stop loss, and because price that has to be my stop loss because this is my last lower high. And then if you look, we do have this 1-minute gap up here that we wanted to trade into that we didn't end up trading to, so we could trade up into that. And that's where, you know, I missed this move downwards, so that's where it would be more risky on waiting on all of this. And we might not get it right because around 11:30 we're not trading no more. Actually about 11:20 we're not trading no more. So I mean, we might just be done with the day, but we are looking at technically we could have another trade. But it is looking like it wants to break down. I didn't mean to press that. So I am looking. I do want another entry, but we might not get the other entry. You know what I'm saying? Because I do want a lot to happen. I do want a lower equal low to happen right here. Then I want us to shoot up, touch this 15-minute, 5-minute, and 1-minute fair value gap right here. And I'm gonna stop loss up here, and then I want to see it break down. And that could happen throughout the day, but just probably not through our trading ranges. And so that's pretty much it. This video is getting kind of long. I'm showing you my thoughts into this another trade that I'm thinking. I showed you my thoughts to my third trade where I didn't get that third trade. I wanted to pull back into this gap that I'm looking at right now. I wanted to pull back, and it would have paid off. It would have been a good one. It would have targeted these equal lows that we were targeting. It would have broke through those equal lows we were targeting. We wanted up here, and that would have been a good one. About $100 on that one just alone. And then if we would have had our stop loss in the right place on the other one, that would have been over $60. And then our winner up $54. So if we had that third trade set up right, if we did mess up on that second trade setup, and we had our first trade setup, been about $200 on the day. You know what I'm saying? Just on good sniper entries, right? We had a good sniper entry on that first trade plus $54. We had a good sniper entry on that second one, messed up on our stop loss, and that would have been over $60-$70 on one contract. Remember, that's just one contract. And then third setup, it just didn't give us the setup, right? So we didn't have it. But it would have been over $100 on the day on just one contract trades, right? So we're just taking it slow. You know what I'm saying? We're still up on the day. Still up on the week, up $15 on the week, up $15 on the day. We're taking it slow. We're just trading one contract. You know, if we feel really confident, we're trading two. You know, feel really confident. I haven't traded three contracts in a while because I'm just trying to keep it slow. I'm just trying to get consistent, and we're doing pretty good. You know what I'm saying? Last 4 weeks have been positive weeks. This week we're trying to finish out positive. We're taking our trade setups. We're not doing like, oh, I want to be positive, so I'm just not taking trades. No, I'm looking for high quality setups. Yesterday, I showed you guys. Yesterday was very choppy. There was no entry on yesterday. I showed you that. Very choppy. Monday, I went over the recap, but I don't remember. Honestly, I don't remember what Monday looked like. But I do have the recap on YouTube where you guys can see if I was either ducking a trade or I just didn't see the setup. Most likely, I didn't see the setup because I'm taking my setups. You know what I'm saying? I'm following the process. I'm taking my setups. Look at this. We did sweep this out, traded this fair value gap, and it could break down. That looks good in the 1 minute. That looks good, but in the 5 minute, technically we have this fair value gap up here. Boom. Oh, we did break structure on the 5 minute. But again, on the 15 minute, it's just a sweep. So that's where I'm getting a little hesitant. Again because on the 15 minute it was just a sweep. But on the 5 minute we did break structure. On the 1 minute it looks good. So if it breaks down and breaks all of this and breaks down, it's gonna be a little frustrating, but at the same time it's not lining up, right? On my 15 minute, again, we have a sweep on the 15 minute. It's not a break of structure on the 15 minute. On the 5 minute we do have a break of structure. On the 1 minute, we did have a breaking structure, of course, on the 1 minute. And then we had these equal highs. We had a fair value gap on top of these equal highs. And it swept out these equal highs, touched that fair value gap, and it's looking like it's dropping. So, it's going to be a little frustrating, but again, we're sticking to the strategy, you know what I'm saying? We want things to line up. 15 minute, 5 minute, 1 minute. 5 minute it does line up, but looking at that 15 minute, again on the 5 minute it does line up because we do have a high, low, lower high, lower low, and then technically this is our pullback, and then we broke structure again. So on the 5 minute it is looking good. On the 1 minute, of course, it's looking good, but on the 15 minute again on the 15 minute, let me delete all this just so. But again, on the 15 minute, it doesn't look good because that looks just like a sweep. And that's where we're struggling. But again, it just might not be a trade. It just might not be a trade, right? So that is pretty much it. I went over everything. We're feeling good, you know what I'm saying? We're feeling confident in our trades. We're doing good on the trading setups, right? Again, it would have been 2 winners on the day if I didn't mess up on that thing, right? And we learn from the mess up so we do not make those mistakes again. So, I mean, it's another learning process to make sure that we break those structures, make sure it's not just sweeps, so we know if we're on where our stop losses have to be, so we know where our trends are, what we're actually trending, right? So, I mean, that's just a good learning experience. It could have been 2 winners on the day, messed up on little things like that, and those little things like that can make you have winners or losers, right? So, We're not too mad at it. A little frustrated about it, but I mean, again, it's a learning thing, a learning process, and we're okay with that, right? So, up 15 bucks on the day. We're feeling good. We're gonna come back tomorrow. Tomorrow, the Fed is not talking. Let's see what news we have coming out tomorrow, real quick. GDP growth rate, QQQ final, so that's gonna be pretty important. PCE prices, QQQ final, jobless claims, 4-week average. So tomorrow's gonna be a big day. GDP sales. Tomorrow's going to be a big data day, but we don't have the Fed talking, right? I feel like these past 2 days the Fed has been talking, so that is kind of giving the market a little choppiness. And so that is going to be good. Tomorrow we're going to have data, volatile day, but no Fed talking. So we're happy about that because these past 2 days the Fed been talking and the market has been feeling a little slower and a little choppy, okay? That's pretty much it. I love every single one of y'all sticking with me on the journey. Remember, guys, stay persistent, passionate. Make sure you're paid, all right? Peace.